Welcome back to the Permissionless podcast brought to you by the team at Guardian. And of course, once again, we're going deep with DeFi builders and DeFi teams, seeing what got them into DeFi, what kind of problems they face, what keeps them up at night, what they initially started building for, and what they're building towards today. And of course, where do they see DeFi going? And today we have an alpha-packed conversation with Thurm, a co-founder of Polynomial. And Polynomial is what they're calling a derivatives Superchain. They've got their own L2, which they've obviously got their own perps and derivatives infrastructure deployed to. It's EVM based and it's a fork of synthetix v3. And in this conversation, we really got to dive deep into the considerations that the Polynomial team and most perps teams are making in general with respect to the order book model versus the on-chain settlement model with oracles. And we got into the nitty-gritty of what the considerations are, what the new products are on the market like Pyth Laser, and how the Polynomial team is thinking about this and where they're headed in the future. And we'll be going much deeper on this in a second. But of course, my name is Owen, and over 3 years ago, really almost 4 years at this point, I co-founded Guardian, and we started on the premise that DeFi would envelop trillions of dollars of TVL from the traditional financial system. And so we set out to build the security audit solution that would allow teams to ship in that environment with trillions at risk. We use 2 competing audit teams and a dedicated fuzzing engineer for invariant testing. Many projects get an audit and they still get hacked. The Guardian model is here to put an end to that. Today, we've achieved the standard that is necessary to bring trillions in TVL into DeFi. And really, at this point, it's up to DeFi to catch up. And of course, without further ado, let us dive into this chat with Thurm from Polynomial. Just to get right into things, like, what's your role at Polynomial? When did you start Polynomial? What's the day-to-day like?
Yeah, like I'm one of the co-founders of Polynomial. What do I do is I do everything in a sense. Like I try to do everything, figure out how to do it, and then get better people than myself to do that thing.
Yes.
We started mostly like primarily a little bit after DeFi summer, because during that time, me and my co-founders, we had this small group chat of friends, and we were just like farming everything, trying out a lot of stuff. And halfway through it, we are like, we can make better things. At least like we thought we could make better things than the things. And we were like, okay, let's just build something. And then we tried to build it. We've been in the space from 2017, but at that time we were mostly in college at that time, and it's more like, we used to go to hackathons, build up small products. And then afterwards we quit our jobs, moved to like a house far off remote. It was COVID, you couldn't leave the house for like few months, and we were just sitting there and hacking. And then we looked into crypto, and then like one thing that made sense for us is like crypto is a primarily very good for finance, at least much better for than anything else for finance. And in every financial sector, typically the derivative sector is the bigger sector than the financial sector. Like it's typically like 10 times bigger than the financial sector. So at that time, it just made sense that it's going to happen in crypto also. It's already happening. And so we set out to build products in derivatives. And first we started by building on top of options, slowly pivoted, and is now building on perps. So we launched our main product, Polynomial Trade, a while. I think it's been almost 1.5 years, on top of a chain which we made for derivatives, and which is a perp exchange. And we have done around 5 billion in volume, and it's been like we are slowly like ramping it up. But the core idea is the same thing. Like we think like derivatives are going to be really big, and in crypto, like you typically need like specialized infrastructure for doing something like really great. So that's how we are thinking, that to build really good derivatives, you need like very specialized infrastructure for that. And it's kind of how we are doing at the moment.
Yeah, and you say you started with options. That's super interesting. I did not know that. Did you guys build your own like options smart contracts, or were you building on top of another protocol? What did that look like?
We started off in a hackathon. We went to this ETH Global hackathon, and we made an options exchange on top of Uniswap v3 like a month or two after it initially launched.
Oh, that's cool.
And kind of made sense, but it didn't work because options are really hard to pull off as an AMM, at least, because it's like the volatility is very high. The seller or the LP is always at a loss. It's very hard to do risk management at these volatility levels. So that's kind of how we like moved out of options.
Yeah, and did you use like an oracle or anything for like the volatility index, or
No,
what
no,
was
no,
that?
no, no, no. It was fairly simple. It was just like call and a put option, and then you trade it. And then, but that was like in the hackathon. And then when we actually built it, we launched a test net, and we realized like everybody's making a loss. So then we just actually built it for real, because from test net itself we understood that this is
Yeah.
probably not a very very good idea. I think like in a few years when crypto becomes more stable, I think it will make
Mhm.
a lot more sense.
Yeah, yeah, just the volatility index, way too high. Yeah, and I imagine were you doing it for like long tail assets on LP pools?
I don't think you can do it, right. Like I think sometimes like even on ETH or BTC,
Yeah,
volatility goes to
yeah,
100%. It's like you're saying like in a year, I don't know if it's going to go to double or half the price.
or like zero. But yeah, so I guess was that the transition from options to derivatives and perps was because basically you explained that.
Yeah. So we first build options, and then we build like option vaults, and that is the first product that we made live. We build it on top of protocols called Lyra and Synthetix, and then after a while we decided to make perps. We first made on top of Synthetix. They were like our partner from before, and then over while like building on top of Synthetix, we realized that the primary problem is that we need to actually change things from the chain level itself, and they were not really willing to do that, so we just made our
Yeah,
own chain and did it ourselves.
I see. Was the main issue like latency with the trading? What was it?
I think primarily the problem is that L2s are still very nascent. They are
Yeah,
not that great as we want it to be, right? Like in a comparative level, it's still expensive because blobs are expensive, right? And
yeah,
so what can happen is that the fees for opening a position can just increase, right? Like for us, the thing was sometimes it used to take like $10 to just open a position. So when you
yeah.
are having this $10 to open a position, you price out a large amount of users, and you also
Mhm.
increase the liquidation price by a lot, right? Suppose you had a liquidation price of $2,000. Just because the gas spiked, your liquidation price is a little bit higher. It can
Yeah,
matter a lot for people with a large position size. So
yeah.
you do want a little bit of like speciality, and you can see it, right? Like there are like platforms like Hyperliquid. They are like not even using any chain to push it, right? Or like DYDX did the same. So an L2 is still a riskier option than an L1, where you don't have to post data on chain as
Yeah.
frequently. But yes, like it's still better than deploying on Base or Optimism, which we did in the past. Like we deployed our thing initially first on Optimism, then we did deploy on Base for a while, but we did a private beta and it was way too expensive. Like so, we just decided to like cut
Really?
it and
Okay. Yeah, so it seems like mostly like gas and compute.
gas compute. Then you can also customize it. Like I know it's like still like a very early thing, but in the
Mhm.
long term you can see a world where like every L2 will have its own custom layer. It's not going to be like inside the sequencer, it will be a little bit above on the top, and you can see an early versions of this by flash blocks, like how Unichain and Base is happening. So I think like this layer that is there, it's going to be more customizable to the usage, right? Like it's
Mhm.
more like if it's going to be like a derivative chain, it will have something like for us, it can be okay if there is a liquidation, process it first before every other thing. Or if it is like, we can make like, these kind of set of rules which everybody agrees is best for the system, and we can
Yeah.
just process those things really well, right? Like for us, one thing that we do a lot is updating price, because we use an oracle based model for the part. So we could like make it like happen much frequently, much better, which it decreases risk, better for traders, better for LPs.
Definitely. And then I mean, how do you start to think about like compatibility, composability with other apps? Are you looking to bring them onto your chain, like kind of like what Hyperliquid is doing, or are you guys the sole like builders on your roll chain or app chain?
I mean, like we would want to do it, obviously. And how we think about it is that primarily we are Oracle based, and the primary problem I have, we like any app has is liquidity, right? You
Yeah,
want to build a new product, but you don't have liquidity. So what
yeah,
we did is we separated the liquidity part and the product. So what you can do is the liquidity that we have is currently used just for the pubs. But in the future, if a options protocol comes or a prediction market comes, they can still tap into the same liquidity. So what that means is if somebody comes and stakes in our liquidity layer, currently it just goes to the perp. But you can have like two perps even, right? One for Forex and one for crypto, right? And you can be like the LP can decide I want to provide liquidity to both at the same time and collect fees from both or just from one of them. But the main thing is that if you look at crypto as an overall trend, peaks of TVL happened in 2021, 2022, like DeFi summer, that kind of side, right? And we never reached that level till now. And though it sounds like yeah, it sounds like we made a lot of technological progress over the last few years, it hasn't like really materialized, I would say. And it's going to take a lot more time. And I think like when that happens, I think currently there is what maybe at that time 200 apps. Now I think there is 2000 or maybe more apps, right?
Maybe
And
20,000.
yeah, maybe 20,000. Everybody has their own version of something, and all this liquidity just gets fragmented and fragmented away, right? And half of us don't even know where our money is. That's why we have the D banks and the zappers of the world
Yeah.
to see which all chains we have money and all that kind of stuff.
Increasingly useful. Yeah. I guess through that lens, really the position you want to be in is you want to be the holder of liquidity. And then essentially people will come to you and they'll build the use cases off of that. But you have the truly defensible thing, which is the actual liquidity, which is like that's your barrier to entry and that's the economic power that really all of DeFi needs to build off of. So yeah, that definitely makes sense. And I guess how do you go about attracting the liquidity? What's your offer to the marketplace for aggregating liquidity?
I think what we do is primarily I would say like it's a bit complex of a problem, right? Firstly,
Yeah.
like people trust you less because you are a new chain. And then but one thing that we can offer is we can bring assets from mainnet, and
Mm-hmm.
then we can give an yield on top of it, right? For example, we have SUSD, and not a lot of apps on like L2s and all have like yield on top of SUSD, even on L1 also, right? So maybe we are able to give like the trading fees, it's more like 20% on top of SUSD, which on like a good time of the market can be go to like 30 to 40%, right? So it's like 50% you can get yield, and it's all like stacked up, right? So you can stack yield. So I think that is like one thing, and you can stack yield off of an asset from any chain. And we do this because we make composability a little bit easy. We
Mm-hmm.
use a socket, and then we like have a mint and burn bridge on every side. So essentially what you can do is you can bring in an asset from base, like some asset, and you can have an asset from arbitrum. Like we can just plug into our arms into any chain, and then we can make it appear very seamless also, right? Like when a person is depositing or trading in Polynomial from base, they are not bridging into Polynomial and then going and trading. It's more like
Yeah.
you are just trading and it just happens under the hood, right? And it's like a good UX is what we are like trying to achieve. And yeah, that's kind of what we are thinking. Like essentially not having the apps like have like every time when there is a good asset, I feel like they all grow in Ethereum mainnet, and
Yeah.
they get the highest APY in Ethereum mainnet. And then after a while, when the project has reached like peak growth, they think about like going to Arbitrum or Base, and then they finally deploy over there. But then it's like they need to bring in liquidity pool, they need to start giving rewards, and it just like dies out over there. But what we can do is like offer like assets like this. I think that is like a core thing that we can do, and we are putting that into the liquidity layer. And the same concept we are bringing now to trading. So currently to trade, we are only allowing USDC, but in a few days we will be launching this thing, multiple collateral. Essentially, imagine something like you have ether5 ETH, which you're farming. You can bring it into Polynomial chain and use it as collateral for trading, right? And a lot of the times, like perp exchange, they have wrap staked ETH, or like most of the perps are in L2s, right? And most of these L2s, like the liquidity is mostly in like either in USDC or ETH, right? But we can like make it like you bring in like whatever token you're farming, some new BTC or like some new ETH or even some new meme coin, use it as collateral, and then you can trade against it. And that's kind of like how we are like thinking in composability terms in the short term.
Yeah, that makes sense. So basically, you're just limited to anything that's supported by, what is it, like a Pyth feed that you guys are using?
Yeah, we are using a Pyth feed. I think like still it's like something we want to improve on, but yeah, if something has a Pyth feed, we can like get it up, and
Yeah.
we'll use it as a collateral. We'll use it for staking. But currently, staking is essentially stablecoin and stablecoin like assets. But in the trading side, we can bring in any asset. We'll soon like try to do it like much nicer, and then we can have a lot of things, right? Like we can make it like a vault and then just like have basis trade, right? And currently like Ethereum basis trade is take ETH and shorting it. Why not do it with, I don't know, ether5 ETH or
Yeah.
Lombard's BTC and then short it, right? That would make more sense based on how you do it, right? And we can offer them as vaults and all those things. So a lot of unlock of what we were building is still pending and just coming, and it's been a while.
So really, on the UX side, multi-chain, sort of abstracting out what the chain is, abstracting out your network in particular to the user, and then really, how do we attract the traders so that we can get the volume to pay out the fees to the LPs? It's really to me, it seems with these like perps products, it's all about the volume, because if you capture a ton of volume, then you can pay a ton of fees to the LPs. Is that kind of the way you guys see it as well?
I think, yeah. I think at the end of the day, like traders, they just want like better prices
Yeah.
and better
Yeah.
fees. So we are giving out like incentive programs in terms of OP and all. But at the end of the day, like traders, what they really care about is primarily like speed, I would say. And speed has been something I would say like we've been like particularly not very good at till now.
Mm-hmm.
And it's majorly because we use firstly an oracle, and in an oracle based perp you do something called a delayed order, right? So
Yeah.
essentially somebody places an order and then it executes after a while, and this delay is often like lifelong, right? So we are going to change it with like two big updates. Like one is going to like at the end of the two updates, I think like it's an audit at the moment. I think like in 2-3 months, or like the first update will bring this time from what we have right now, which is like 5-6 seconds, to like around 2 to 3 seconds.
Mm-hmm.
And with the second update, which is moving to a pitch lower latency oracle, I
Yeah.
think we can go to around 250 to 300 millisecond. I think like to be safe, it would be like around
Yeah.
half a second, and that's little bit of latency, everything combined. Then it would be a little bit comparable to Binance, because
Yeah.
if you're trading on Binance at the moment, you press a button, you close a trade. You press a button, you open a trade. You come on Dexus, you are like you have a position open and you are closing, and if it's like a crash and the seconds
Yeah.
just eats into your soul, like you're like, why is it not opening, right? Why is it not closing? It that just happens.
God forbid the network gets like congested.
No, because of the delayed order, right? Like you're like
Well,
for
that,
the
and then also, God forbid, the network gets congested on top of that.
I think the network congestion we don't have at the moment because
Yeah,
we are
you're on
siloed at the moment,
chain.
yes. But the other one is still a problem.
Yeah, no, definitely. And yeah, I did hear about that. Is that the new? I forget what it's called. The new Pith product that's like super low latency. What is it called?
It's called Pith Laser.
That's right. What is the? I haven't looked into that. What's the technical change that allows them to go so low latency?
It's more like you're doing off-chain compute. You're
Yeah.
a little bit trading off on the decentralization, I would say. And then just
Yeah.
since there are a lot of publishers, you're just pushing it directly. I think before a pitch chain consensus is done. I think I am not 100% sure how
I see.
technically, because we
Yeah, I
didn't start
wonder.
working on it fully yet.
Yeah. No, I wonder if, because I know with Pith they have like their confidence intervals. I'm assuming they also have confidence intervals with Laser. I wonder if they're just larger.
No, I don't think so. It's more like currently, since it's Solana, it is a SVM thing, right? So
Mhm.
I think it's more like you need to get the consensus fully done. I think that takes a little bit of time. And the
Okay.
bigger time taking at the moment is like to fetch. It takes a lot.
Yeah.
Currently, it's more like it takes like around 1 second to fetch the price. So it's like the price weights are fast, but it's more like the infra can be improved a lot. I think that is with laser fixing, making the infra like much more.
I mean, that's pretty interesting because we see a lot of people moving to order books now, and like specifically for the reason of like latency. Yeah, I mean, I think mainly latency. So
I think we are also moving to order books in a way, because
yeah,
what we are going to do is like we are going to do a system where like when a person places an order, we will have both an order book and an AMM,
Okay.
and they will both compete for the order.
I see. That's actually a really interesting idea because especially like in the synthetix model, you have this ambient liquidity that's over here and it's backing all of the open trades on the exchange. Does that mean that if somebody opens through an order book, are they still going to be backed by that ambient liquidity?
Yeah, it will be similar. Yes,
Yeah.
it's essentially like currently like what we have is a pool, and then you have different. You're basically what we call as like a market, right? Like a perp market. So inside the perp market, you can have many things, and and sorry, inside the perp market, you can do a simple standard order, and then with that you can also have this like order book order, which is essentially like a bunch of limit orders where you just match it, right? And that is kind of how we are thinking, like if the position is easily movable from the to the order book, so you can start by just having someone just take the order book position and then just like filling it on the and taking a spread. So essentially you can solve the cold start problem for an order book, because most of the time what happens in an order book is you launch an order book, nobody wants to take the other side, and you end up
Yeah.
having like market makers. I think Hyperleak had a unique approach of having a HLP vault. I think this is also like one more way of like solving that particular problem.
Yeah, because I assume you're also allowing them to exit with either choice, so they don't need to find a like
Yes.
you open your position, you can also close it through the pith feed. So that's when you need the ambient liquidity to be there.
How I think about it is like the AMM model is particularly very good for low liquidity markets, right? It's very good for like smaller markets. And when it goes to the top of the funnel markets, the ETH and the BTCs of the world, order
Yeah,
books are significantly better.
yeah,
So what we think about a market cycle, right? Like a market starts from spot, at a certain point it becomes a perp, and for that the AMM is actually like much better than an order book, because you actually have a significantly more like better slippage.
yeah,
You always know you have a position, like you don't want to go into like a new token and open a long and then come back after a month trying to close
yeah,
it and there is no liquidity, right? And that's what happens in an order book sometimes, and not right now, but in the bear market like it used to happen a lot. So that time you can just exit and trade via the order book, via the and then after a while you just go and trade directly in the order book, and then it just becomes more efficient. More sophisticated players can come and they are much more familiar with order book, and that's kind of how we are thinking about it.
yeah. And then I assume liquidations would still go through the stakers. They would basically take on the
Yeah, the liquidation, but the liquidation fees is not that high. Like it's
yeah,
relatively like much more optimized, and it's a very small tip for both the person who liquidates and how the staker is getting.
yeah. No, that absolutely makes sense. Yeah, so of course, order books. I mean, really, I don't know if we'll ever be able to beat the execution price of order books latency. But I mean, with latency, yeah, that pith feed seems like it's getting pretty close.
Yeah, like we are not taking a pure AMM approach. We are actually going very hybrid, right? So that's kind of how we are
Yeah,
thinking about it. Like it's going to be hybrid. It's going to be a combination of both, and with that, like it's going to potentially like be a little bit better, right? Because there is no point in making the same product as Binance and hoping we will do better, right? Because they actually are more centralized
yeah.
and they also have a lot of advantages. What we need to do is build something that doesn't exist at the moment.
Yeah, and how would you expose that to the users that they like? Would you just keep it completely abstracted, where it's like they don't know if it's going to the order book or if it's going to on-chain pith settlement? How does that sort of play out in the UX?
I think initially we would, but over time it would become irrelevant and it
Yeah,
will just get hidden. And initially you want to show it to the user because they want to understand what is happening. But
hmm,
over time, I think what happens is people understand it and it just becomes second nature, right? And we
hmm.
also will get better at it. And it's kind of how new systems get created, right? And I think a little bit of changes will be there in the UX. It will be like maybe like a toggle or something, and then you just turn it on if you want to force it,
Yeah, like advanced mode or something like this. Yeah.
or it can be like a drop down in the market, like you do a market order, then you have a market order with an AMM.
Yeah, that's true. It could be like a different order type entirely as well. So, just wondering, were you guys always on synthetix V3? or did you come from synthetix v2 to v3, or what was the transition like there?
We were on synthetix v2, then we migrated to synthetix v3, but we didn't really deploy the product on top of synthetix v3. And then we made our own, and then we launched. So currently we are on. It's a bit similar to synthetix v3, but there are like a lot of changes.
Interesting. What particular did you guys? Because I know there's a ton of like different things that you could do with synthetix v3. It's very like adaptable. You can plug in like arbitrary pools and arbitrary markets. What kind of adaptations did you guys make?
I think for us, like primarily on the staking side, we have a lot more different assets. Like we bring it from mainnet, right? I think that is one thing that we changed. On the perp side, like it's more like the pit laser thing, the new order book thing. Those things are like very different. It's not their other version. And a lot of some changes were like more on the like the contract side. It's more like how you on the what is it like the multiple collateral, like there were like some changes. Like we kind of like what we did was like we looked into like the problem, and we were like, okay, we were building on top of synthetix for a very long time, and we picked up the things that we really like, and we changed the few parts that we didn't really like agree with. And like for example, we didn't agree with having a SNX back stablecoin, for example, right?
Yeah.
And I think they are also like agreeing to the same thing. But yes, like, and so like over there, like that's what we did. And then like little bit over time, like they also did some things that we did, and we also did some things they did. I think at the moment I wouldn't say like they're like that similar of a product at them in like a few months at least.
Yeah. I mean, well, especially because they're mostly like perps markets on like Base and Optimism, and now I think Arbitrum as well. Yeah, and of course you guys have your own app chain right now and going for the order book and stuff like this. So, and also the multi-chain. I don't think that like you guys are using Socket. I don't think that synthetix has any kind of a integration like that.
Yeah, we leverage a lot on the bridging side, right? Like we try to make things like much simpler and more focused on the UX, I would say, because in a technical sense, I think like perps are decent, but the thing is like you're not able to compare on a user experience level. I think a lot of people do understand that nowadays, mostly for DeFi products.
Yeah, what kind of KPIs do you guys like measure to like compare to, let's say you want to compare to like a synthetix, compare to like a GMX? What kind of metrics do you guys measure or put stock in?
I think at the moment, like we obviously everybody measures volume, right? And that's the main metric, right? And then open interest, right? Because volume is easily gameable. At least some people do it. So
Yeah.
open interest is something. But at the moment, like what we are focusing on is like the product that we have at the moment is more like an MVP. So we want to reach a stage where like it makes a lot more sense to the user like in a few months. And what we are trying to do is like talk to the traders, have chats with them, ask them what they want. We try to build like strong relationships with like traders or stakers. So we don't really know who they are because they ran on, but we still like chat with them, ask them like, does this make sense? All that kind of things. I think it's more what do you say, that stage of the product cycle where you are more driven by user feedback than data.
Yeah, that's the most exciting part is like getting feedback of like a feature that very clearly people want, and then you can ship it within like a couple days or a week. I mean, obviously, depending on how complex of a change it is, if it's like UI stuff, ship it very fast, get that immediate feedback. That's a great feeling to have. I built a few software.
I remember like a few weeks back, like somebody was saying like, "Oh, I want to trade on chart," and then we just shipped it in like a week or something. And now you can trade directly from the chart. You can now like place stop loss, take profit, everything from the chart, modify it, close your position, like all those things directly from the chart, which makes the experience for a trader like much better. I'm surprised we didn't do it before. Now that I use it regularly.
Yeah, in retrospect, yeah.
One thing you mentioned is you've been building since like 2020, and on that level of like user feedback, what have you noticed people ask for now versus like back then, and like the evolution of what DeFi traders want?
I think at the end of the day, like people are similar, I would say. I think people just want something that just makes money. And the thing about crypto is the opportunity keeps on changing, right? The narrative keeps on changing. So your product needs to play well into the narrative. I think that is what people always want, right? Like in terms of perps, it can be as simple as like list the new market. Kaito is trending, so like put Kaito perps, right? Or like Hyperliquid is
Everybody
trending, put
was listening.
Hyperliquid trends, right? I think that is the main thing that people really care about. But if you really look at it, like people are no longer interested in like trading from a MetaMask pop-up for a perp. But I
Yeah.
feel like that is more like they are just being like sensitive to latency. That is mostly on the side of like I make more money, I lose money because it took a lot more time to open, right? And I think those are like some things like people are like, but it's all coming back to like, can you help me make money faster, quicker, better, right? And we see a world where people are paying 1% fees on pump.fund telegram bots. I think people mostly want like, if I place a trade, it should work, it should make money. I think that's what they really, really care about. And that's been same,
Yeah,
I think.
that is the one thing that's been constant is the latency time to open MetaMask has not changed.
Oh yeah, that is true. I wish there was a better solution.
Yeah, I mean that's actually, I mean like stuff like Hyperliquid, how they have the like I don't know, you sign a message and you enter trading mode, and then you
Mhm.
just like and it just goes. That's actually it's a really adept way to solve the latency problem above and beyond like an order book, because it's literally changing the UX of like, okay, we didn't have to go all the way down into the literal innards of how we're matching a trade to fix this latency problem. This was literally just a UX thing where we just remove MetaMask entirely, and you save the user just as much time as changing from like a pith feed to an order book, which is probably a lot easier to implement the trading mode.
I mean, this is a session case, right? Like they also implemented that. I think the one advantage they have is also like EVM, like how we implemented session cases, like with this account abstraction EAP,
Mm-hmm.
and the account abstraction EAP is not very optimized for speed. I would say it still takes a lot of time to like actually execute the order, and that's why like 4337 don't have a lot of adoption. Also, I would say, and I think like that is one other area like which you could like improve. But yes, you can make the product UX a lot better, and people have been doing it. And also people at a certain point, like people just wanted to trade perps maybe after the FTX crash on chain, and
Yep.
they were willing to use any product. I think the minimum standard of product they want is has increased a lot nowadays. People
Mm-hmm.
won't just go and trade any random product now.
Yeah, the feature wars. That's actually interesting. I never thought about like how FTX probably drove a lot of on-chain activity after they essentially rugged their users.
I mean, that's how it started. No? Everything started from there.
I guess in some twisted way that was a little bit good for DeFi in that sense.
I don't know. Yeah.
No comment. And another thing you mentioned is like changing narratives in crypto. So I guess aside from being a builder, as a user of crypto, like what narratives are you paying attention to right now? Is there any other stuff on chain you're playing around with?
At the moment, like I think memes are kind of over, right? Like Solana meme narrative is kind of over. I think I can tell you like in a builder centric, like what are some things I find interesting. I found Fluid interesting, where they combined DEX and lending into a single protocol. I think that is like a pretty clever way. Also find Ethena interesting. But I guess like in a way, like these are like simple answers which everybody would say, and there is nothing that particular other than these two that comes into my mind at the moment.
Nice. And I see you have the Milady PFP on. Is NFTs like just Milady, or is that something a vertical you're interested in?
Oh, I am just into Milady. I don't really. I never understood NFT during the NFT bull run. To be really honest, I bought some NFTs. I made money, but I never knew how I made money or how I lost money. And then like Milady was something where I just liked it because of the people in it. It was more of a community sort of thing than monetary or anything like that. So it's just bought it, and then I just kept it one day as a PFP, and now I feel like it's very hard to change. It has become like a part of your identity.
100%. Nice.
Yeah, the Milady. Once you put the Milady mask on, you don't go back. You're in the cold now. Yeah, from like a high level, what would you say is like the number one thing that's holding back Polynomial from like endless growth? If there was one thing.
That is a very good question. I would say like it's multiple, right? Like one is like core infrastructure. Like we need to improve it a lot more. We need to like make the chain faster. We want to make the block times like 200 250 millisecond, so that the traders feel like they are not in a really worse of product than compared to like something like Binance, right? And
Mm-hmm.
I feel like that is a good unlock. Another unlock which I feel like is the multiple collateral which I discussed about, where you can bring in any asset and trade against it. I think that would be like a really really cool thing. And over like at least for this year, our focus is majorly on the perp. But I think like afterwards we will focus on like having more protocols use our liquidity layer. I think that would be like a very interesting unlock over time. But right now it doesn't make sense because the liquidity layer only has like few millions, so it needs to be significantly bigger, and then we will like start doing that.
Yeah, so unlocking like the network effect of having other people come and build use cases for the liquidity, and then I guess that kind of has like a compounding effect, like sort of a flywheel for you, where people come and build, that gives yield to the people who are staking, and then you attract more stakers, so people come and build more, sort of goes from there.
Yeah, and also like simplifying staking is something that we were looking into. Like currently,
Yeah.
like you stake, you make like you make like negative APY. Like staking has been like since the inception of product, like in a week actually measure like in 3 month period. Like it has not even gone once in a single day in a 3 month rolling period. But the thing is like some people just come stake and they just withdraw and it might be like they made a loss, right? And it just like it's very sad for them and they lose trust or confidence in the product. But we want to have like a simpler staking experience where someone can just buy a stable coin like product which just goes up in price, and
Hmm.
it's more like you kind of have a way where there will be like an insurance fund, something like that, and you make sure like the yields are like more fixed over time. I think like in mainnet you could do it by like maybe like a pentel integration, but like having your own chain comes up with its own compromises as well.
No, definitely. And I guess to get to that point where you're sort of like feature complete, ready to have folks building on top of you, building in integrations, and you have the UX that you want and all that stuff. What's the main like time add for all of that stuff? Is it development? Is it the security process? What is it that like basically holds you guys down the most in terms of shipping?
I think it's hard to make complex financial products. Like the thing that takes the most time is like to fix upon an idea, right? At least like
Mhm.
that's how I code. Also, like it takes a lot of time to like come and make an idea refined and then like be ready. Then you have a really solid idea to execute. It just takes like a week maybe, right? And then or two
Mhm.
weeks, and then do audit also like 2 weeks or something like that, or like something of similar sense, right? You can ship it and you can make it relatively light, but to get the thing from a what is it like some random thought to like a thing that would work is
Mhm.
it takes a lot of time. I think that is the thing that like takes the most amount of time, right? Like it can be like, oh, let's just add, oh, what is it like, let's just add order book on top, and it sounds like a
Yeah.
simple idea. It took us like a year to build it, right? Like it takes a lot of time to, and coding is not the thing that like took the most of the time. The 6 months 7 months we just were just thinking and deciding while we were building other things. It happened on parallel, but that takes the most of the time in my opinion.
Yeah, makes sense. Like sitting back and thinking about mechanism design. How do we want the incentives to be like? Are we going to do liquidations this way? Yeah, and trying to foresee all the downsides before you actually code it up. Yeah, I can definitely see how that's like a big bottleneck. So in terms of like mechanism design, is it mostly you at Polynomial sort of thinking through these things? Do you have folks do it with you? What does your process look like there?
Yeah, we have like around 13 people in our team, and give or take like some people helping. Yeah, like there is my co-founder, he also works on it. I also think about it, some of the other engineers also kind of like we have this culture where like we kind of like do like small hackathons in the team
Mhm.
every few months, and then we build something, we see how it works. During that time we like typically brainstorm, think about some idea, and
Mhm.
anyone can make something cool.
Yeah, I think that's a great culture to have, especially as you continue to scale. Like putting the ideation back on everybody else in the organization and like making sure they know that they can really affect the product in some way. I think that gives huge ownership and probably hopefully you see, a good amount of ideas come out of folks just feeling that ownership and wanting to contribute to the feature set that you guys have. Yeah, that's definitely an interesting way to approach it. And then I guess in terms of like hiring, do you see any bottlenecks on the hiring? Like any particular roles you guys are trying to hire out for?
Yeah, that is really hard, right? I mean, building a company is. I mean, I was seeing this tweet the other day. Like, you remember CC was trying out, I think DeFi or something, and he was saying that he was finding it very difficult to figure out how to provide liquidity for an hour or something. And then people were asking him, like, oh, you don't really use onchain. He's like, no, I don't really use any of this. I am just good at hiring people, and I think that is the truth. Like setting up a team, hiring a people, making sure there is a good culture. I think that part is the hardest part, and it's always difficult. And if I did nothing and just did that and did a really good job, I think like my job is done. But
Yeah, no, I definitely agree. Ultimately, it's like, how can you hire the people who are better at all the tasks that I'm currently doing? And then you've upgraded every area of the business, and then you're no longer needed, right? So, yeah, I definitely
I wish that
agree
was
with
true, but there will be the business will have more things to do.
that. Yeah, always, inexplicably. Those things just seem to come up. But yeah, so I mean, are there any particular roles that you're looking for right now?
Right now, we are looking to help someone in firstly like someone who can do mechanism design. That would be like interesting.
Yeah.
We're also looking for people who can do growth, that is
Hmm.
growth community, like non-technical side. We are a bit weak, I would say, because we are a highly engineering focused team. I think we would
Yeah.
like to have like some really cool guy to come and take over the whole thing if they want to.
Hey, yeah. Well, me too, dude. Me as well. But if there's, is there anywhere we like, let's say, if there's anybody watching who would be interested in like applying for any of these roles, is there anywhere we can send them?
Just DM me on Twitter. That would be the easiest way.
Okay.
You can send an email to jobs@polynomial.fi. You can DM me and say like, you listen to this. I would at least take a look.
Yeah, for sure. Well, I mean, hopefully you can get a superstar just based on somebody happening to take a listen. But yeah, dude, I totally agree. I think hiring's, especially in such a new field where like you're literally not going to find anybody with more than like 5 years of experience in DeFi.
I think that is more than that. I feel like the problem is like in crypto, like people jump from one thing to
Hmm.
another very fast.
Yeah,
And the thing is like when you are in complex topics, it's very hard to be really good at it in a year or something. And if
yeah,
you're not really good at it, you're not gonna solve it really well. And that is a problem which I feel like unless you are like some expert from before and like you already are like really good at it. But I think like people need to have a little bit longer term point of view, I would say. I think that would be like better because crypto is already has very high learning rate, right? Typically
yeah,
like people used to jump from one company to another because you are so bored, you know everything. But in crypto, I would say like that's not the case. Like you like 2 days, like 2 months, the narrative is something else. People are onto something new. Somebody came with a new algorithm which makes things much better, right? And it just keeps on moving. I think that part is super interesting about crypto, and I think like it would be good to have like some people on our team.
yeah. Bought in for the long term. I guess it's all about incentive structure when it comes to that. So I mean, how do you think about incentive structure for incentivizing folks to stay for 4 or 5 years?
We just do standard stuff. It's crypto. Like you make something good, you know you will be incentivized. Like there is no question about it, right? Like it's like you are seeing literal billionaires created out of 1 year or 2 years of effort.
Yeah,
It doesn't happen in any other industry that I am very good at. I know of, right? Like you look at AI, like there are billionaires being made, but Sam Altman and Ilya has been working on it like 14 years or something, and everybody is like researcher, PhD, like that kind of like level, right? But on the other hand, like crypto, like people are like it's a good field where like you have the pump fund where you are like doing what around 1 billion in revenue for an app that is made less than a year. I think like that kind of growth I don't think it's possible outside, and I think it's worth it if you want to do something in your life. Crypto is the best place to do something, and that's I strongly believe it. That's why I'm building in crypto.
yeah. The best, like I would say, I don't want to say risk adjusted return because it is a very like risky, like you don't know what's going to happen in this space in any given year. But yeah, I mean, if you're going to take like 10 shots in any industry, I feel like in crypto, you're going to get the most amount of those shots be like a home run than anywhere else.
And also like the problems are so obvious, right? It is not like people don't know the problems. Like most of the time you are trying to find product market fit like chewing glass in darkness, right? And here in crypto everybody is telling like, bro, this is broken. Everybody knows it's broken. It's not like nobody knows it's not broken. It is more like, does anybody actually want to step up and fix it?
Yeah, and who can like pull together the team of people who have like the right experience to fix it? Because that's like you said, it's hard to like attract those people in the first place, find the right ones, and then incentivize them to stay for a long period of time. But I think we have an abundance of problems in the crypto space. That's what we've established.
Yes.
Yeah, and then I mean, really, finally, like, what is your overall like strategy to attract like the right people? Have you tried anything in particularly? I mean, I know we've tried a few things that I'm happy to share that have like worked out for us. But anything in particular you guys have tried?
I think we are just referrals at the moment.
Yeah, we'll say one thing we started doing for like we've been trying to recruit like lead researchers who are like the best in the world, and that was very hard for us because I mean, well, first of all, there's just not a ton of them, right? And they're fairly like they're very competed over from top security firms and stuff like this. What we tried is we put out like just a big like bounty, referral bounty. We put out like $20,000 as like a referral bounty, and basically it just got a lot of like attention. And from that, we got the right people's eyes on it, and they actually reach out to you directly. So we never actually ended up having to pay out the bounty, but just putting it on there shows like, hey, we mean business. We want this, and we got the attention, and we were able to get like a few of like truly exceptional like world class researchers off the back of that. So that's just what worked for us. I don't know if you want to try it out, feel free to try it. But yeah, that's what we've been playing around with.
I think that's a good idea.
But yeah, dude, I mean, really, I think we're coming to the end of our time together. But is there anything else that you want to cover? Anything relating to like, I don't know, business and DeFi, problems that you see, market outlook, anything like that?
Nothing in particular. I'm just curious, what do you think about some interesting things? Like I see a lot of people tinkering with AI nowadays, but it's more like the AI agents of the past were glorified chatbots.
Yeah, I can't tell if it's like, I mean, like you said, there's just so many of them, and the thing is, I don't even know if any of them are like legit. Like, I guess the play is that we'll find like some superior UX for interacting with blockchain. I'm still not totally convinced on that, but I don't know. We'll have to see. I guess it really comes down to like who's got the users at the end of the day. So if they've got the users, then they can direct all that liquidity. Then I guess they've proven it out. But I haven't really seen any AI app that's got a ton of users.
But one interesting thing I find is like people are just making these Twitter bots where they are public, right? So you don't really have the users also. It's a bit of yeah, but yeah, that's an interesting space I've been like just looking at for like fun, because I used to do a little bit of AI in my previous job, so I was like super curious about that. Otherwise, like, do you see any new trends in DeFi in particular?
Yeah, let's see. New trends in DeFi. So the way I see it, there are different areas of DeFi, like obviously like different core primitives. I think in the derivative space, they're going to either they're exploring order books, like we discussed, they're exploring multi-chain, and we're working with a couple of derivatives teams right now who are working on both of those things. And then I would say in general, multi-chain and layer zero in particular, they seem to be really cornering the market and bringing a lot of assets to multi-chain, at least with like the type of work that we've done. Like we've just, for one reason or another, we've done a ton of layer zero work in the last like 2-3 months on a number of different things, working with like cross-chain NFTs, like cross-chain. I won't say what asset is cross-chain because I don't know if it's public yet, but the biggest NFTs in the world will be cross-chain soon. I can say that. Yeah, and cross-chain like perps, like I mean, obviously you guys already have it, but more people are exploring that. I think they're sort of catching up to the feature parity that you guys have. on that front. But obviously, you guys are working on other things ahead of that. So I think cross-chain is a good narrative.
I mean, there are like a lot of decisions you can make also. Like cross-chain perps, like even though we make it like, people bring the capital and trade, you could have a system where like you have the capital in that chain itself and trade. The trade, I mean, as in the risk engine isn't like there itself. Like you can do something like that. That is an angle we didn't try, but yes, I think there are a lot of things like that. It's interesting that like, are there any, interop tokens at the moment? It's not there, right? Like the cross chain tokens, is that like a really big thing?
Not really. I mean, there is Zero, which I guess the incentive for that is just like you can use Zero to pay for cross-chain transfers, but like nobody does it. They always use Ether.
I feel like the problem here is the liquidity. Like you can't really spend like insanely large amount of money on every single chain to get liquidity, right? So like
Yeah.
people just try to just have a hub for liquidity in a one particular chain and then just like leave it at that, right?
Yeah, I think all the value unlock probably in the next couple of years is, and what we're seeing people building towards is just on the UX side in terms of how do we abstract away gas, how do we abstract away the chain, and then how do we also get you better execution price, and like how do we make it easier for you to make money? Like the best DeFi app is like you push a button and like you get yield immediately. So I guess we're like building closer and closer to that experience. Yeah, that's what we're seeing for a lot of the people, a lot of the teams that we work closely with.
I mean, like we've done like half of it. I don't know. Like I think like at the end, it's also about the market opportunity. I would say like the narrative needs to.
Yeah, chasing the narrative as well. I think that is, I would say the narrative right now in DeFi is cross chain, in my opinion. But yeah, dude, appreciate you hopping on and having this convo. I think covered a lot of things in terms of like how you're attacking UX and what you see the outlook is in terms of getting the best experience for traders, attracting the most liquidity, using that as a liquidity layer for other folks to build on top of. But yeah, dude, it seems pretty bullish. And of course, if anybody wants to go use Polynomial, you can check out polynomial.fi and trade or provide liquidity and get paid some of that yield.
Thanks for having me.